Last week, data from the UK's Office of National Statistics showed house prices have risen 8% in a year. But there could be some respite, with this week's nationwide house price index expected to show house prices rose by 0.6% month-on-month in May, compared to the 1.2% month-on-month increase reported in April. However, the debate continues about whether there is a UK housing bubble. I'm Sophia Aribo and you're watching Dukascopy TV. With me to give his analysis on the situation is Absa Wealth Investments' Chris Gilmour. Chris, at the beginning of May, the Bank of England gave its toughest warning yet that UK housing boom could turn into a crash. But there are those who point out prices haven't risen to their 2007 peak. Essentially, that there is no boom. Which side do you come down on?
I think we have to be clear here. There are two main aspects to this. There's an imbalance between supply and demand, and there's a major disconnect between wages and prices. So, for example, wages are only rising at, say, 2% a year, whereas prices are rising at 8%. Eventually, in my opinion, because these are out of sync, you'll get a self-correcting mechanism coming into place. So from that aspect, I would see there's probably not a bubble materializing. Something else we have to look at here is the fact that a lot of the narrative surrounding this whole issue is based around London. Now, London is a huge part of the UK economy, perhaps around about 50% of it, maybe around about that sort of figure. So what happens in London is usually restricted to London. If it starts coming out into the broader UK market, then I think that could be seen as being more dangerous. Bear in mind that while 2007 levels have only been reached overall, in London, prices are 30%, that's 30% higher than they were in 2007. So in London, I think there could be a specific bubble, and it is a big part of the UK market. But generally speaking, throughout the UK, I don't think bubble conditions are developing, not just yet anyway.
Minutes from the Bank of England's latest monetary policy meeting shows there's a divide in opinion on when to raise interest rates. Some think the low rate is fueling the housing boom, but Bank of England Governor Mark Carney wants to wait so as not to damage the economic recovery. When do you see the rate being raised?
I suspect rates probably won't be raised until about the middle of next year, middle of 2015, and perhaps even slightly further out. I think the governor has to play a very, very delicate game here, because, as you rightly say, he doesn't want to abort the kind of nascent recovery that's taking place in the UK. It has gained a lot of momentum in recent weeks and months, but nevertheless, it's something that could potentially be derailed if we saw too high a rate hike taking place too early. Remember, we are at 300-year lows in the UK. So I suspect the end result is that we're only going to see fairly gradual, fairly small baby steps, if you like, rates taking place, but probably not until the middle of next year and maybe into the third quarter.
Chris, later this week, the government will release a report on the Help to Buy scheme guarantee. How much do you think this scheme is to blame for the rising property prices?
I think it certainly has fueled a bit of it. Approximately 20% of new house sales have been affected because of this scheme. But nevertheless, as I say, there are a lot of restrictions on this thing. So it certainly isn't fueling the prices at the upper end of the spectrum. Those are mainly cash deals. Some of them are coming from foreigners as well. But it is having an impact. But again, I bring you back to the central thesis here. And that is, there is, in my opinion, a self-correcting mechanism coming through. A lot of this, the Help to Buy scheme, will have been perpetuated, if you like, by people who've had a pent-up demand for the past 4 or 5 years, couldn't get in, they wanted to buy, and this has allowed them to do it. Once that's out of the way, I think we'll get into a more normalized situation.
And lastly, how do you think the Bank of England will strike the balance between cooling down the property market and putting a lot of people with mortgages in trouble? Are interest rates the only option?
It's a very, very good question. And the simple answer to your question is, yes, it is just about the only mechanism they do have. Central banks around the world only really have interest rates at their disposal. What the governments in the past have done is to offer tax incentives for people, for first-time buyers. Until the year 2000, it had been in operation for over 20 years, I think. It was called MIRAS, M-I-R-A-S, Mortgage Interest Relief at Source. That was abolished by Gordon Brown because he thought it was a kind of middle-class perk. But maybe the authorities might consider bringing something like that back in if they don't just want to use interest rates. So that way you could get the balance between a generally gradually rising interest rate environment, but at the same time allowing some help to particularly first-time buyers.
Thanks for joining me, Chris. That's all we have time for on this edition. You've been watching Dukascopy TV.